How could this play out?
Well, Laura, it's going to be fascinating just to watch the politics of this, maybe even legal cases as well. And the reason for that is that Star today has put out its profit, so it's now going to be in the public talking about this situation. It obviously had a takeover bid for Crown, which it then dropped. And that was seen to be for strategic reasons, as Crown clearly has got ongoing issues in terms of royal commissions in both Victoria and Western Australia. And then yesterday, the New South Wales government said that it would take up all 19 recommendations of the Bergen inquiry. One of those recommendations is that there be no shareholder with more than 10% interest in Crown. James Packer is the major shareholder with more than 30% interest, although that was being dropped down to close to 20%. All sorts of machinations here. So if he were to drop down even further, obviously, and he's a willing seller, let's be honest, it's going to be fascinating just to see whether he has any influence in Crown in the future. The idea of these royal commissions and inquiries is that he doesn't. Here's the Star profit report. It's down 5%, which is better than expected. In fact, its Queensland casino has done significantly well on the Gold Coast. Revenue down by just 11%. The share price, you can see here, up 4.7% in early trading, $3.55, which just goes to show that notwithstanding the fact that obviously Sydney has been largely locked down in recent times, over the past year, it's done reasonably well.
Interesting indeed. What about BHP shares? I mean, they're eye-watering, but they've continued to fall after it announced a deal to merge its petroleum division with Woodside yesterday. But that's not the only influence on the price. So what's happening there?
Oh, it's not. So there's a lot of things that it announced yesterday, one of which was a big acquisition in potash in Canada. It also announced that it was going to drop its listings of its shares in New York and London and consolidate them all back into Australia. Now, the issue of that is if you are in an exchange-traded fund, an index tracking fund, you'd have BHP shares. Indeed, if you're a superannuation investor in both New York or London, you'd have its shares. So if they come back to Australia, effectively what's going to happen is that the share price falls, and that's what's been taking place, also coupled with a big fall overnight again in iron ore prices. So the BHP share price was down another 6% in London overnight, and been down 6% the previous night. So this is a significant fall for Australia's largest company. And as I say, in the face of those big falls in iron ore prices as China tries to get some sort of control over that market as well.
Yeah, OK. Well, look at Origin Energy. Maybe you get some understanding there about why BHP is trying to move out of oil and gas.
Well, it is. And the reason is because you saw this with other energy companies as well. Massive write-downs. AGL had one. Origin Energy has got one as well. They've been affected by, obviously lower gas prices in particular in the past 12 months. Now, the funny thing about this is lower gas prices means there's lots of gas. And yet the ACCC the other day warned that there were going to be gas shortages in Australia over the next 12 months or so. So today you saw the Origin profits come out for the past year. And in this particular case, you could see that it's full-year profit is a loss of some $2.29 billion. The dividend here has been cut by 2.5 cents to 7.5 cents. So it just goes to show that, again, most of that loss is the write-off in the value of its assets as a result of falling gas prices. It's going to be interesting to see what happens when the gas prices eventually go up, I'd have to say, Laura.
Yeah, it will be indeed. Ross Greenwood will have to leave it there. We'll speak soon.